Good morning and welcome to Signal Centre. I'm Steve O'Hare and this is Talking Bull. Today is the 16th of February and it's just me. You got me today. You haven't got Joe. Joe's taking a well-deserved break after holding the fort so gallantly this week. So we're going to dive straight into the headlines. Then we're going to take a look at some technicals. By all means, if you want me to look at a market, which I don't cover, please reach out and I'll pick it up and try and cover off some and place my technical expertise on that market, try and give you some idea of where we'll see support, resistance and markets moving around. So let's start off with the headlines. Right, so we've seen a strong rebound. I think we've got the wrong headlines up there. Let's have a look. Looks all right. Yes, we have. We've got the right headlines. We saw a strong rebound in US retail sales yesterday. Recorded a strong rebound, 3% increase for January, following a 1.1% decline the previous month, and well above consensus forecasts of a 1.8% increase. Underlying sales increased 2.3% on the month after a revised 0.9% decline in December. And there was an increase in the control group of 1.7%. Headline sales increased 6.4% over the year, with a substantial 25% annual increase in food, services, and drinking places. The New York Empire Index recovered strongly to negative 5.8 for February from negative 32.9 previously, and well above consensus forecast of negative 18. Although it remained in contraction territory. There was also a similar pattern for orders and production on the month, although there was a reported decline in employment for the first time in over 2 years. There was a faster rate of increase in price pressures on the month, which will maintain some reservations over the inflation outlook. Companies were more optimistic over the outlook for a small increase in expectations surrounding price increases. US Treasuries lost further ground after the latest US data releases, with a 10-year period 10-year yields moving above 3.8% for the first time since the first day of 2023. Higher US yields underpin the dollar, especially with the ongoing expectations that the Federal Reserve would have to be more aggressive in raising rates. The dollar index posted 5-week highs, but edged lower this morning. The FTSE 100 index posted a record high on Wednesday. We'll take a look at that on the charts in a minute. Briefly hit the 8,000 level as the S&P index and Nasdaq indices also managed to recover in positive territory. Bitcoin jumped as equities rallied. Bitcoin grabbed onto the shirt tails and recovered. Gold lost ground, but there was a surge in cryptocurrencies, Bitcoin jumping to 6-month highs. We'll take a look at that as well straight away. And before that, Australian employment dips again. The latest labour market data recorded an employment decline of 11,500 for January after a 20,000 decline the previous month, and compared with expectations of a 20,000 increase, while the employment rate increased to 3.7%. So we are seeing signs of unemployment increasing. Definitely something to really sort of like understand and take account for when we're talking about full-blown recession levels. So let's take a look at the charts. I'll share my screen. Morning, Mark. We'll have a look at sterling yen shortly. Let me just dive into my we're going to look at cryptos first. We're going to look at Bitcoin and see what it's done, this jump that we've seen. Let's take a look at the weekly chart, because for me, this is really interesting. We've had a few stories I've seen over the last few days. Oh, wow, 30% increase in Bitcoin. Is Bitcoin coming back? Well, it's never sort of slipped out of vogue. Everyone talks about it all the time. There's a lot of heavy marketing that goes into the cryptocurrencies, as we all know. But let's really think about what we've seen. This increase from 15,352 to 24,000. What did we get up to? 24,900. So really, really big increase. Wow. But just think about where we've come from. We've come from almost 70,000 and we're trading just below 25,000. So let's not forget, the pain that a lot of people have felt on this sell-off. And yes, we are having a bounce, a rally, a bit of a double bottom formed that we can see that's played out, and potential for really a retest of this this resistance, which I've had in play since we had the spike down from the week of 9th of May last year. There's been a big level. We saw this massive spike down when we broke through that 28,800 to 29,000 level. We bounced back above it, but then once we cleared that level, we've never gone back above it. So resistance above is key at 25,400. Above that, we've still got the 28,800 barrier, and there's plenty of levels of resistance above that as well. So I'm not going to pour water on the fire, but just sort of like be realistic about what we're seeing at the moment. It's a minor correction. I still consider this bearish, and probably my tune won't change until we really clear almost the 36,000 level. That will sort of like put a little bit of a smile on my face, but we really need to get above that 50,000 level for me to sort of consider this going to the sort of like heady heights of the all-time highs again. So let's move on from cryptos very quickly. Commodities. Take a quick look at commodities, and let's take a look at gold. Gold's had that really sort of like big bearish outside candle that we posted the week of the 30th of Jan, and we've continued to move lower. Obviously, the dollar rallying has helped this at no end. Taking a look at the daily chart, let's drill down into the levels we're seeing. We saw a break of the 1842 support, got down close to the other levels of support which we'd highlighted from before, 1825 to 1835. That's key now. Flirted with it yesterday. We've off to a good start this morning. Bit of support coming in, and a little bit of a rally higher. But again, we're clearly in a 4-hour downtrend and an hourly downtrend. So looking really at the moment, selling into rallies, especially while dollar is looking pretty decent. Go back to the daily chart to try and sort of like consider where we could go from here. You can see this is a bit of a topping formation. You could probably within here find some sort of head and shoulders formation, maybe the 5th of Jan, along with yesterday's low. You could draw a nice little neckline there, and think about how we're potential for a head and shoulders formation. Bit of a way to play out, not getting carried away. But this bearish flag that I drew in the chart last week, that has a measured move target towards 1790. You got the 200-day moving average, the 100-day moving average. We've broken below the 55-day moving average. We're below it still. That's at 1853. So I think there is still more room on the downside for a little bit of a correction before we really sort of like get into whether we've got further potential for upside. But at the moment, on the back foot, gold. Silver, very similar price action. We've just broken through the 100-day moving average yesterday. 200-day moving average isn't far away. This hasn't really sort of had the rally that gold's had. Support coming in below at 2060. We're not far away from that, I suppose. But that inverse head and shoulders played out quite nicely. Didn't quite hit the measured move target, but got pretty close before the turnaround. Also take a little look at copper. That's playing out in a similar sort of price action. We got a break yesterday of support at $3.99, $4. 396. Remember this 396 level from way back on the 14th of November. That's key support for me. The 55-day moving average has crossed over the 200. That's a bullish cross. However, we are seeing this little pullback and potential for this bearish move to could potentially continue again, and maybe look for further deeper support down around about the 380 level, around about the 200-day moving average on copper. On crude oil, we've had a bit of a recovery over the sort of early part of February. Over the last 3 days, we've seen price action stalling. Doji candle Monday, bearish candle yesterday, spike lower but recovery, spike lower on Tuesday as well, recovery. So we are posting mixed signals really on here. 55-day moving average doing a little bit of a job with support, And today we've got off to a slightly more positive start. So we've had oil inventories out for the week. That's the major number. You've got geopolitical uncertainty, obviously, that we've always dealing with, and you've seen a nice little bounce. On the upside, expecting resistance to come in on the WTI around about the 80.75 level, but 82.60 the key resistance. Support below around this 55-day moving average, 77.60, and then 76.60, but the major ones coming in at 72.68 and 70.21. As you see, it's a bit of a sideways week on here. If we look at the weekly chart, you can see pretty poor candle. You know, the crude oil is used to sort of like a lot bigger range by this point in time. If we look at the 4-hour charts as well, we have broken above the cloud. So again, trying to establish a slightly more positive trend on the short-term charts, and the hourly chart also breaking above the cloud and trying to establish further upside. Brent crude oil, similar sort of price action on that. Obviously, it's trading at just over a $6 premium. We're seeing these candles of indecision, but they are sort of posting lower highs, lower lows. However, we've bucked the trend this morning. We've seen a nice little rally that's got a little bit of momentum in it and potential for further upside. Natural gas has bobbed along quite swimmingly sideways since posting a low at 236. Remember, we talked about a larger formation, this head and shoulders formation. The measured move target for this is around about 135, which is a lot lower. However, we are trying to hammer a base out here, and it's looking quite positive to start with. We've got that scary day on the 8th of Feb where the short-term rally stalled and reversed sharply. And since then, we've seen a little bit of value buyers coming in looking. Really need to see a break of that 269, 270 level to open up the upside. And from that, for me, you've got a double bottom formation projecting a measured move target up to $3. So definitely forming some small base there. Probably this is priced in dollars as well, so the dollar strength doesn't help. If we didn't have that dollar strength, potentially maybe would have bounced a bit further. So that there's still a sort of like I think an opportunity here for a risk reward perspective. If you think about where we've come from on natural gas, 530, we've left a huge gap over that weekend as well. And I always like to see gaps filled, and so does the market. So that's one to be aware of. Definitely potential for further upside, but on a risk reward basis, it's screaming out for that opportunity. So let's take a look at the Forex now. We'll dive into the majors first, take a look at them. And euro dollar, obviously with this dollar strength, euro dollar slightly under pressure. Posted on Tuesday, posted a bit of a shooting star candle and a bearish engulfing candle yesterday. We've got the support level coming in at 106.60, and it feels like a little bit of a short-term top in place on euro dollar, and but really would wait for confirmation for that break of the let's get the line drawn on the chart so we can measure this a bit more accurately. For me, they're a big thick black line, 106.55. A break below there definitely opens up a little bit more downside. You can see support will then probably transpire around about just below the 105 level. But 55-day moving average, we're trading at it now. Obviously, bigger support well below. Euro dollar slightly on the back foot. Cable, similar sort of price action. We've seen that dollar strength, which has resulted in negativity towards cable, sterling dollar. Shooting star formation formed. Lovely, like to see those. And it's now a question of whether we can break this 100 and 200-day moving average, which is sitting just below 119.43, the 200-day moving average. So that's one to watch. We've obviously got the spike lower last week, the low from there, the 7th of Feb. That comes in at 119.60. Again, another level of support to really sort of like, if we can see good momentum coming through here, then it really opens up the downside. From a resistance perspective, the 55-day moving average doing a bit of a job. Prices couldn't close above it on Tuesday, but and couldn't get above it on Wednesday. So really interesting. That's coming in at 121.80 on cable. So that's what to watch on the upside. Just for Mark, I'm going to cover off sterling yen. Take a look at this on a sort of like weekly basis first. Shows you I haven't looked at this for a while. My chart's all over the place, but we are seeing, let's look at the bigger story. Always like to do this when you haven't looked at a chart for a while. Just sort of take a look at these, the levels that are in place, the longer term levels, and then break it down. So overall, if you look at we're looking at from 2015 all the way up to now. I know this is not what people want to look at, but think about the longer term picture as well, and apply it. If the short term technicals are looking bearish or bullish, then if you've got a backdrop which is supporting that, then it makes your decision a lot more comfortable, shall we say. So we have stalled at a really sort of like decent level, 61.8% fib, and reversed sharply from there. We spent a week above that level, and then we've never got back. Well, we've never been able to close above it after that, and so the rejection from there. So for me, long term, you've probably seen a bit of a top in this. 61.8% fibs are always a great correction target in markets, and really sort of like this corrective rally from the lows, potential for further downside. Obviously, you can see we've had spikes with some sort of like yen strength at certain points, but at the moment, this week isn't going too bad at all for sterling yen. We've seen this this bottom formation, the shorter term chart. We'd focus more on the last sort of 3-4 weeks of price action, and we'd seen this nice bottom formation around about the 105.58 level. And for me, a neckline is really important, so that it's the high in between these 2 points is really key for me. We managed to sort of close above that high on a couple of occasions between the 23rd of Jan and the 27th of Jan, and again yesterday. So we're retesting the sort of like the resistance levels that we've had in place since probably, well, I would say the start of the year, but it's like towards the end of December, the last week in deck. So for me, this is key. We've had 2 really positive days to start the week. Monday, bullish engulfing candle, extension higher, closing at a great level. We've had a pullback yesterday, so we've got to be a little bit nervous about that close from Tuesday. However, I think it's a case of getting that sort of momentum going. If we can see, you know, at the moment we're seeing the sort of like the sterling strengthen against yen. If we can see a little bit more strength on that sterling side, or a little bit of weakness on the yen side, we can break free of this sideways resistance. We've still got this level here, got to consider. So the 162.33, a close above there, and I think the upside, it has a lot more potential. You can see from a sort of like a vacuum play, there's not a lot between 164.30 and the 162.40. So you've got a couple of 100 points on the upside if we can manage to sort of like really get some momentum going. Until then, you've still got to respect these resistance levels from the 28th of deck and the spike lower. So here we go. We'll put that in as well. So there is that sort of like the void there. You've got to respect the resistance levels. Yesterday's candle, you could sort of liken it to a hanging man candle, which isn't great for the bullish story. So be aware of that. There's sort of it's at key level. Again, good risk reward if you want to fade this market at these levels. But yeah, I'd wait till they sort of get a bit closer. I wouldn't be fading them when the sort of like the risk reward isn't in play. There's still sort of like you've got a nice little trend building up for the upside story. Again, you've got support coming in around about this level here. So yeah, play the range really at the moment for me on sterling yen. Let's take a look at whether there's any other requests at the moment. None at the moment. Let's take a look at Aussie dollar, one that's been interesting for me, and thinking about, are we forming a bit of a top formation on this? You know, I like to look at head and shoulders formations, and I like maybe overplay them a little bit, but they are pretty reliable when they do play out really nicely, or they're pretty reliable most of the time, put it that way. So for me, we've got the potential for a head and shoulders formation. Until we get a break of the neckline, I wouldn't think too much about it, but it's always nice to get in early doors. And if we sort of like go back to I suppose fibs, we like to look at fibs, you know that. You can see this really nice, this is happening around about a really nice 61.8. Again, talking about the 61.8% fib, I can't stress it enough. It's a great Fibonacci retracement level to look for that stall in a correction and a reverse lower. So I'm still slightly bearish on Aussie dollar, and looking for further downside if we can manage to clear that support below and get a little bit of momentum to the downside. But there's still, argument here for a 200-day support, 100-day support, 55-day support. So still got to wait for that to open up. We've had one request on the. Let me dive into indices, and I'll come back to Ethereum indices. Let's take a look at the FTSE, baby, all blue skies, all-time highs, and we've been saying this for a little while now. There's been no real technical reason to not continue in this uptrend. It's just really breaking out nicely to the highs. You've just got to go with it, go with the flow. Don't fight the trend. The trend is your friend. So for me, it feels a little bit exposed up here above the 8,000 level. We've got the nice little impulsive move higher, like 5 waves. We normally get 3 waves higher, 2 waves back, 2 wave corrections. We've seen that. Are we in the 5th and final wave? Potentially. Got this really big first wave, wave 2 pullback, 3, and wave 3 is normally never the shortest wave. So we can get an idea of maybe the potential for the extent to which FTSE can go. So I would basically looking at 8,292 as potentially this should stall in front of there and have some sort of correction. Dips buying, obviously, just stay with it. It's sort of like there's no reason. Even the candles, we had a little bit of a stall from the week of sort of the 6th of Feb, where we've had a sideways price action, doji candles, shooting star, hanging man, and then bang, straight up through those resistance candles. So yeah, don't argue with the trend. It's looking good. This is Germany 40, again, looking pretty tasty on the daily chart. We've got the golden cross, everything's smooth, swimmingly, going along swimmingly. And the price action really for me faces maybe a test around about this 15,750 level. That would be the sort of like the swing high we got after posting the all-time highs all the way back January last year. So to the upside, we've got resistance. We've had this like pretty bearish candle posted on the 9th of Feb, but this week's price action is retesting that resistance level. And again, no technical reason to be selling this. It's basically sticking with that upward trend. And yeah, it doesn't feel like we should be on all-time highs because the world feels very inflationary and yeah, very depressive like, recessive like. Yeah, anyway, we'll think about other words we can put on there. We're going to, we've covered Mock's just asking for sterling yen. We have covered sterling yen. Mock, just have a little bit of a rewind on it. It's a very sort of like pivotal levels for me, sort of like there's a bit of a risk reward in there, but a bit of caution as well. US 30, the Dow. And this hasn't really, I think these markets, the US markets haven't really had the same momentum that we've seen on the European side of things. And they're sort of slowly catchy mousey. And we're above the 55-day moving average again, bullish golden cross on here. So everything looks pretty rosy overall. We are at decent resistance levels. We saw the August 22 swing high. We saw the break through this in November, the battle we had, the spike high we saw on 13th of deck, the retracement from there, and really sort of like playing with these resistance levels. So at the moment, it feels like we're seeing players selling into this resistance for the play lower, but overall, it's looking quite cushy up here. Nasdaq is trying very hard, especially over the last this week, to break through this resistance level that we've got up here, 12,850. It's only a 38.2% retracement from the all-time highs. So you can see how far this is, in fact, behind the European markets. And until we break through those, this like 38.2% fib retracement, we're sort of still, for me, still on the back foot. If we can't get above that 38.2, then well, again, let's look at the moving averages. The moving averages are sort of moving higher. It's looking for potentially for a golden cross to form towards the end of February, March, if we maintain these higher levels. So yeah, maybe it's just a little bit of a slower burn on the Nasdaq. S&P is very similar price action to Nasdaq at the moment. They seem to be very linked, and we are again really sort of like trying desperately to get above the 4,200 resistance level. Again, if we look back, we've could probably bring the 50% fib retracement in there. That's where we're hanging about at the moment on the S&Ps. So you can see the story. The Dow is a lot more aggressive. S&P next, Nasdaq next, in terms of this corrective rally. So yeah, that's pretty much covered off. We've done indices, we've done forex, we've done cryptos, we've done comms. So let's take a look now at what we go. The time of the show, we go to the gun to the head. This is where we pick a trade idea. Me and Joe, normally we risk 1% of a live account we started at the start of the year. For the last 3 years, we've been doing this on a theoretical basis, but we thought we'd put our money where our mouth is, and embarrass ourselves by losing money. But yeah, January's got off to a bit of a slow start, and February hasn't been much better. But let's see how. Can we see how Joe did yesterday? If he published it on the chart, then we'll be able to see it. Let me just look at this. Let's get the chart back up. Ideas. Short-term top on sterling yen. So this is why everyone's sorry, I will come back to Ethereum as well. I did promise that. Let's look at Joe's gun to head. So he was looking to sell at the top, resistance on the daily, small top on the 60-minute, and looking to get short of this. And yeah, it's sort of closed slightly offside, so didn't do a lot. But he's like, as we said in the chart, fading into this sort of rally, sort of trying to play that range. Yeah, overall unsuccessful as a trade idea yesterday. But you know, that's the way it goes. You win some, you lose some. Let's take it back to just, I did promise to look at Ethereum. One last one before we dive in, and Ethereum. Look at this baby. Yeah, pretty similar price action, obviously, to Bitcoin. It's had a really nice rally. We've come from the heady heights of 4,860. We're all the way down at 1,684. We've got off to a decent week where the weekly candle's bullish engulfing. That's good. That's positive. You can see it on a little bit of this reversal formation, morning star formation, crossover, 55-day, crossing over the 200-day moving average. That's a golden cross. So even that candle there, the 12th of Feb and the 13th of Feb, gave us a little sign on the moving averages that you know, the sort of trend higher has good potential to continue. Resistance levels. Let's get rid of these. Resistance levels, we can look all the way back to August, where we saw this stall in the market, 1790. Again, for me, that 1790, 1800 will be key. We had a 161.8% fib extension level from the double bottom formation. That's 1800 as well. I mean, it's taken a long while to play out, and you know, maybe not as relative as we thought, but the double bottom formation played out nicely, got up to 1630, so that was nice. At the moment, we've sort of like obviously saw price action spike up to 2nd of Feb's high, and we're seeing prices stall again, a little bit of a retracement from there. Short-term markets have broken above the cloud, which is positive on a short-term trend. Got a nice bit of support down here, so remain positive on there. And obviously the hourly charts aggressively broken away from support, and that's following quite nicely. So overall, it does look positive. Again, from a risk reward perspective, it's a nice level. It's a nice play to sort of like fade this in front of resistance. But from a trend perspective, the trend on the short-term chart is definitely higher, and you have to respect that as well. So yeah, it's a bit of a mixed bag again for that one. Hope that helped. So me thinking about my gun to head trade idea while I was going through the analysis today. I'm sorry, but I've got to have another go at natural gas. I've done this before a few times. Oh, let me get it back. Oh, let's go on. I'll show you where I've done it. Obviously, we've got to log into our live account. We've got that with Oanda. Obviously, very well respected, regulated firm. And I hope no one's watching my password there. And we can basically go into the account, go into the live account, and we can see how we've done since the start of the year. We started with an account of 2,000 sterling and 1,941. So we've lost £60, which is 3% of the original amount we started with. So I'm going to try, while Joe's away, to get us back on track. I'm looking at this nice little rally we've had since 7 o'clock. So I missed a little bit of opportunities. Only like 5 cents, which doesn't sound a lot, but obviously there's great potential upside in here. So I'm going to basically buy nat gas. It feels like we're forming this bottom formation. I've drawn a nice little inverse head and shoulders over here. Let me get rid of that. It's a bit of a messy chart. I'll clean and tidy this chart up before I publish it, but let's get the trade on. And my idea would be to be getting long at these levels. Really, the stop should be below that swing low. And target, always look for, we sort of have a little rules that we sort of always look for at least a 2-to-1 risk reward on our trade ideas. And for this, yeah, we're sort of like happy to sort of like follow that through. This one, I'm going to go for a little bit slightly more on that today. If we manage to get above the resistance level at 268, it should open up a little bit of an aggressive, more upside. But let's get this live on the chart. Trade, create new order. Oh, I can't trade a symbol. Sure, we have traded natural gas. I've got to actually do the. Sorry about that, guys. Got a little bit panicky there, thinking, oh no. Remember, we cut these trades at 9 o'clock GMT or UK time. So we're getting long around about that level. Stop below the swing low, and let's see if we can trade this. Create new order, and we're going to go in at market. We're going to buy it at market. We're going to take profit, stop it, take profit and stop. The stop is going to be at, I'll leave it at 247. That's fine. This is 2.68 to 1, risking £19.39, as you can see. Why don't I just do that? So yeah, getting in here, 260. The stop is at 247.70 and targeting 285.70. So that's my natural gas gun to head trade idea, and I'll get that published up so you can see that, and we've got reference to it. Oh, hold on. What's the risk reward on it then? Yeah, it looks a bit 2.8 to 1. Nice, happy with that. I think my average is over 7 or 8 years is about 2.3. So I did promise I'd do 2.5 or somewhere around there, but I've obviously gone a little bit above that this morning. Anyway, don't worry about it. That's the gun to head trade idea from me. Right, let's take a look now at what we're expecting later. So 130 US producer prices, obviously thinking about the inflation picture, thinking about that, along with the Philly Fed index, US jobless claims coming out at the same time. And UK retail sales, is that? Yeah, that's tomorrow morning at 7 o'clock. That's nice and early. Get up for that. Key events over the next week. We've got global PMI data coming out on the February the 21st and February 22nd, Federal Reserve minutes. And that is it. That's a wrap. Thanks for joining me today, guys. Thanks for your interaction. Hope you've enjoyed it. Hope it's been informative, and look forward to catching up very, very soon. I'm here again tomorrow. Joe's back Monday, and then we can really get our teeth into the rest of the week. Cheers, guys.